Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Happy New Year, everybody. Checking in on the markets to start things off in 2019. We got SPY continuing the bounce. So where we left off last over the weekend, we were watching the hourly uptrend because as we know, when the hourly uptrend is lost, that is our first indication that the daily lower high has been set. So we have not lost that hourly uptrend during regular hours of trading. We can see these little higher lows that SPY keeps putting in. And even during trading on Monday, we came down real close to losing that support level of 246.90, and the bulls bought that dip and protected it by 57 cents. And then we closed with bullish momentum into the end of the day, into the end of the year, and we're now looking pretty good for the bulls. All things considered, that is pretty much ideal consolidation. Sideways, keeping the uptrend and closing with resistance in sight. 251.40 is a key level tomorrow to be watching. If we break that level, we have bounce continuation. So at this point, we're pretty confident that an equilibrium is the most likely scenario. And for those of you, myself included, who did not get the kind of hedge that they wanted in terms of bearish positions on this pullback a couple weeks ago, we can now be looking to do that again. So waiting for the top of this bounce to be set, entering bearish positions, and then either locking in profit, anticipating that a higher low will be most likely, or holding that out with a break-even stop loss level and letting it run as long as it'll run. So what we're going to be looking for is however far we continue this bounce, maybe we get another green day or two, and then we're going to look for the loss of the hourly uptrend, and then we come back. We're going to pull back on the daily, look to form a higher low, and then from there, we're either going to change the daily trend or we're going to set that higher low, fail to see continuation on the bounce, and then roll back over and test the recent low of our dump. So those are the most likely scenarios, in my opinion. Equilibrium first things first, once we top out, which we have not done yet. And then from that equilibrium, how we consolidate, the amount of volume behind it, what percent of the move we give back. These are all factors that are going to give us the odds of whether we're likely to see that continuation daily trend change or whether we're likely to give it back. Certainly still watching the political environment of, Trump and China and all that, and certainly watching what the Fed rates are going to be going forward in 2019 and whether they're going to get a little bit more dovish or not. But bottom line is price action is always king, and that's what we're watching. Oil on the daily time frame only had that 1 day of a bounce. So the SPY bulls are pretty grateful that we've seen the strength that we have on its bounce with oil not really cooperating in the last few days. Oil's trading sideways. This is the 4-hour trend to be watching, a double bottom at 44.33 and resistance, most importantly, at 46.97. If we get a bull, let's actually say the most ideal scenario for the rest of the week, Wednesday through Friday, is for oil in the market to be going in the same direction, whatever direction that is, because that's going to only give added momentum. So if we see SPY break 251.40, we want to see oil break 46.97 and see continuation on this move as well. If we see SPY lose the hourly uptrend, we want to see oil break 44.33 to help push that price down and see consolidation. IWM on the daily time frame, similar to SPY, daily inside bar, and SPY is an inside bar as well, but maintaining the hourly uptrend. Each day is a higher low on this bounce. That's a pattern that the bulls need to maintain, and we're going to see, can the bulls break 135.01 and see that continuation the second half of this week. And again, the hourly uptrend still intact. Most recent hourly higher low is 132.45. QQQ, very similar as well. Inside bar, bounce still underway. Higher lows each day, maintaining that uptrend. And the hourly time frame, we can see just like SPY, we were close to losing support, but the bulls showed up right in time to defend it. And we have a couple clear resistances. Let's just zoom into the 15-minute time frame from trading on what's the day? Monday, we had resistance, lower high, and then closed with another lower high. So a bit of a 15-minute equilibrium. If we just want to zoom in and use these levels, this is what we're watching. We had the high of the day, low of the pullback, lower high, higher low, and then close the day with another lower high. So 15-minute equilibrium on QQQ to be watching. And again, it's all about the hourly uptrend for the markets heading into the second half of this week. Financial sector continuing its bounce as well. We actually broke the high just barely of Friday on Monday, and we still have the hourly uptrend intact here as well. So not an inside bar, slightly more bullish. And on the hourly time frame, the most important short-term support is down at 23.59. So that's where we stand. Pretty much everybody is very similar. Everything that we just looked at, slight differences. Oil's a little bit different as well. But as far as the markets go and the sectors go, it's all about the hourly uptrend, and it's all about scouting that daily lower high, which has not been set yet. So anticipating that an equilibrium is the most likely scenario on SPY once we top out, we're going to be looking for VIX to give us an equilibrium once we bottom out. So we're going to be looking for a support level to be found. I'm looking down at 2250 as one support, and then 2034 as another level. And after a pretty solid pullback at this point, 36 all the way down to 25, that's why these traders like to buy puts on, these volatility instruments like UVXY when we see spikes, because as we know with how markets work, when you see periods of volatility, the vast majority of the time after that volatility, we see these price discovery ranges of equilibriums. So that's when we pull back, and that's when we see the bounce. So at this point, we need to change the hourly trend bullish. It's the exact opposite of SPY. Change the hourly trend bullish. That's our first indication that the daily higher low is being set. And then just like the equilibrium we're anticipating on SPY, once we form our low, we're going to look for a bounce and a lower high to form and a tightening range into the first week or two of the new year. So it's a pretty clear setup for me in the markets in terms of, what's the most likely scenario. We have the hourly uptrend as a top watch. We have the daily top of the bounce as a top watch, which is going hand in hand with that hourly uptrend. And we're looking for the equilibrium after we get those signals. So I appreciate you watching. Hope you had a great, safe, happy New Year night. And let's do 2019 right. Do a good thing. Trader tip 6,487. Get some plants around your trading space. They can lively up the space. They can give some oxygen, purify the air. They'll be your friends. They don't require a whole lot of attention. I just stick them on a mat here and I slide them around with the sun as it goes through across the sky. Get some plants.